Buy now, pay later as a concept is not new to the world. Installment payments have been around probably since the Great Depression in different ways. Credit cards are a form of buy now, pay later. But when we're talking about buy now, pay later in the digital consumer space today, this is often what people need. So companies like Furry, Klarna, Afterpay, Apple just issued a statement last week as part of the iOS 16 release, where they announced that they're releasing Apple Pay Later, which is also their pay in four solution, right? That consumers will be able to access from just your digital wallet, which is a huge market. You just go to checkout, choose pay in four.
Welcome to 20-Minute Leaders. Just sit back, relax, and learn from the leaders of today. It's a journey. Each one is different, unique, inspiring. Let's get started. This episode is powered by J Ventures, a community-driven VC fund in Silicon Valley in partnership with Leumi Tech, sponsored by Homeward Ventures, Hippo Insurance, Upwest Labs, Synergy Global, Hillel at Stanford, Leap, Birthright Excel, Serona Partners, and in media partnership with C-Tech. Hello and welcome to 20-Minute Leaders. Today I am with Hany Lynn, product lead at Fundbox, a fintech company providing an embedded working capital platform for small businesses in the US market. She currently leads two of the company's core product domains, the customer experience and journey of Fundbox credit products, as well as Fundbox innovative payments products focusing on B2B Buy Now, Pay Later solutions. Hany's passionate about building new products and exploring innovations that drive more engagement, delight customers, and establish product market fit. Hany lives in Tel Aviv with her partner, daughter, and furry daughter. When she's not busy solving customer needs, she enjoys CrossFit, surfing, hiking, and traveling. Hany Lynn, welcome to 20-Minute Leaders. Thank you so much for joining me today. How are you?
Good. I'm good. Absolutely. Thank you for having me, by the way.
Thank you very much for joining me. Really from the best place in Tel Aviv, where you're at. But more importantly, the Fundbox offices. We're talking about payments and we're talking about business payments and the business world. But payments in general have seen dramatic shifts in recent years, and the consumer behavior behind payments and the solutions offered for payments, understanding that it's not a dichotomy of whether I can pay or can't pay, but there's actually a range of different options at my disposal. And so I'm looking forward to uncovering some of those options with you and how you're pushing this forward at Fundbox and creating solutions for flexibility. And so, Hany, thank you very much for being here.
Absolutely. So how should we get started? Where do you there's so much, you just mentioned so many things. So
let's start. Maybe understanding a little bit about what's been happening, recently in terms of the shift in mindset behind payments. Why is this even something that we're talking about?
Okay. Yeah, fair enough. I think maybe let's start with payments from the consumer space, because I think that's, the more prominent aspect and probably the world that most people know better these days, right? So let's talk about digital payments, or even more specifically, a hype around buy now, pay later in the payments world, in the consumer space. And just to, level the playing field, what I mean by buy now, pay later, let me give an example of what that is in the consumer market. So I like to buy really overpriced workout apparel, right? And there is absolutely zero reason for me to be spending the amount of money that I do on it. But, being a good consumer as I am, I do it. So I go on my favorite online store for the workout apparel, and I, pick this overpriced top. And I see this, before I check out, it says, well, I can either pay $60 for this now, or I can pay just $15 today and pay over 4 payments using X or Y company. And these X or Y companies are part of this huge growth movement, huge growth opportunities that have happened in the consumer space over the past few years that have been given this name buy now, pay later, right? Buy now, pay later as a concept is not new to the world. Installment payments have been around probably since the Great Depression in different ways. credit cards are a form of buy now, pay later. But when we're talking about buy now, pay later in the digital consumer space today, this is often what people need. So companies like Affirm, Klarna, Afterpay, Apple just issued a statement last week as part of the iOS 16 release, where they announced that they're releasing Apple Pay Later, which is also their pay in four solution, right? That consumers will be able to access from just your digital wallet, which is a huge market. You just go to checkout, choose pay in four. So we're talking about that market. That's what we're talking about, this huge opportunity around the consumer digital payment space. So this is essentially just kind of like marriage between tech and finance, right?
Mm-hmm.
I think the experience happens in two key ways, right? Either, like I just described, you kind of go to checkout, or just before you check out, you have this option, right, to choose pay in four, and you go through this quick application and you get approved or not, right? And then you could just pay over time. And then the other way to do it is, these companies have grown so much, Affirm, Klarna, that, they have their own dedicated app. So consumers just go in the app and they just issue this virtual card where they could use for whichever merchant they want, right? And just pay with installments over time. So it happens, in these two key ways, and it can happen online, and it can be a physical, point of sale, physical store as well. So the market itself is huge, and the benefits to both sides of the transactions are really obvious, right? So to the consumer, you have this super sleek experience that's very relevant for Gen Z and millennials. It's easy to understand, and it's usually free, right? That's part. And for merchants, merchants on average see an increase in cart conversion of about 20 to 30%. And they usually see an average order value of increase of about 40%. So this is kind of a no-brainer, kind of redefining how payments are done today, right?
And so if we're looking at, this buy now, pay later as a shift in, in mindset, which obviously complicates a lot of things, because now it's not as easy as saying, okay, what do I have in my credit line or in my, or currently in my debit card, and I'm able to make this purchase. Now there's all these different models. Is there sort of this, one main business model that sort of the industry has converged on? Is it, the same kind of idea that, we're sort of underwriting and financing, and is it with a credit line and then the consumer pays, or are there different things that different companies may be doing in this space?
So I think two parts of that. One is, most companies are kind of doing the same thing. I think they differ in the sense that some provide for longer plans, right? So the custom plan that you usually get is pay in 4 over 6 weeks, and that is interest free. So zero cost to you. The merchant is actually the one that's kind of paying for it in a sense, in terms of revenue share, right? Some companies, I think Affirm especially, would give you like a longer duration.
Yep.
A lot of the times, they underrate you. They think you may be a little bit more high risk, or you want monthly plans, and then you start paying fees for those, right? So there are different kind of repayment plans, and there's a different underwriting structure and a different fee associated based on that. That's one part. Second part is, I think we're kind of entering this interesting time, right, in the economy where, it could go in various ways. And I think we've already seen this start impacting a lot of these companies as well. And it wouldn't surprise me if we would see many of these companies kind of taking a step back, looking at how they assess risk and underwrite consumers, and possibly become a lot more strict in the sense that this underwriting's become a little bit more sophisticated. I think it's fairly, and I don't want to say easy, but the average transaction that you underwrite in a consumer space is usually around $200, right? Some companies it's more towards 400, for some 100, and that is, we'll probably get to the business space in a bit, but they usually, they look at a soft credit pull, right? And usually that's some transactional history that you have before. and maybe some kind of other factors, maybe a little bit more of a third-party data sources to understand who you are. They do a basic kind of check to see that you are who you say you are. And that's how they underwrite, right? And some companies probably need more rigor into how they assess that risk.
Mm-hmm. So transitioning to Fundbox, first as a company, and then FlexPay, which is sort of your baby child within this company. Tell me a little bit about Fundbox.
So yeah, Fundbox is an embedded working capital platform for small businesses currently serving the US market. What I mean by embedded is that we try and be as embedded as possible within our customers' systems and daily operational workflows. And the goal is basically to provide products that offer on-demand access to capital and digital payment solution that could really drive growth for the business.
Mm-hmm.
And I think maybe, so I could give you like the product business spiel. But maybe instead I can do that. But maybe instead of that, I could give you just a little bit of illustrative example of what it means to be a small business in the U.S. economy today.
That'd be great.
Right? So I actually went to school in the States, went to grad school in the States. And this was 2009. So slightly after, the 2008, crisis. And not a great time to be a small business, right? A lot of people were struggling. So during grad school, I worked for a small business. It was really small, about 15 to 20 employees. And they're doing market feasibility analysis for big development projects. So mainly commercial, military, that kind of stuff, right? And they're actually doing pretty well. Because I was a small business, I kind of had good visibility into the operations. I was doing some analysis and some project management for them. And what I noticed pretty fast, it never dawned on me before when I thought about businesses or small businesses, is that, they're doing kind of well. They would have these, $50,000, $60,000, $70,000 contracts coming in, which is awesome. But like they had to hire people to do them, right? And they had to pay for, goods and services. And it would actually take them about 60 to 90 days to get paid, or even longer. So it created this paradox where the better they were doing, right? The better they were doing, the more stressed they were for operational cash flow, right? And that example is super common for about 2/3 of small businesses
Wow.
in the US today. So actually the majority of small businesses, that fail to launch don't fail because the business model isn't good, right? Or it isn't value prop. They just have this operational cash flow issue that they're unable to bridge. And that's where Fundbox comes in, right? Fundbox comes into the picture and said, look, we know it takes, the average small business about 40 days to get paid. We know there's this paradox. We know that you're trying to grow, so you incur all these expenses up front, but then you get paid later. It's almost unfair, right? You have to pay payroll, you have to buy inventory. And that's why we're trying to create this digital shift, right? Our digital payment solutions are here to help manage the cash flow in the way that is most suitable for your business, for your needs.
Interesting. And so walk me through sort of from a product manager's world, right? I mean, you're going out and you have this thesis and you have this idea for how this product is relevant for the market. But then you have to actually execute on it and iterate on it. So as a product manager now, how do you even begin with this? Does it start with, do you automatically know how to create the MVP? Is there a pre-process that you do before that? Walk me through that a little bit.
Yeah, absolutely. And maybe I'll use FlexPay, which is our first buy now, pay later solution, as an example. So the short answer is no. We didn't, wake up and know, or this is what we want to do, this is what we should build, and it was far from it. For Fundbox, we really try to be customer centric, right? If not customer obsessed. So we actually have a great team of Fundbox that's dedicated almost completely to understanding the voice of the customer, doing interviews and qualitative and quantitative surveys and having this feedback loop of voice of the customer for the product team and the UX teams at Fundbox. So FlexPay actually started from very extensive research around payments needs for our current customers. And the first thing we kind of noticed is that there was this repetitive pattern where customers used us for payroll, right? They had to bridge this payroll gap,
Sure.
and they used us for that. They would just use those funds for that. And it made sense, right? We said, well, payroll as a business owner, that's probably your most important expense, right? I mean, you want to keep your employees happy. If you don't pay them, that's a bad day for everyone, right? And so our thought process was, okay, we can create an automation, like we can embed ourselves right into this payroll scenario and create the ability for the customer to use Fundbox to fund their payroll. So they have the peace of mind that their payroll will always get funded by us. And then they can choose how and when to repay us back based on their needs as a business, right? And so we went out on this very lean POC, which we built in a couple of months. Actually, it was super quick. And we just rolled it out. So let's see, if there's a product market fit and just want to understand what people think about it. And then we'll decide how to iterate on it. And the great thing about it is, we got feedback really fast from customers. And one of the feedback that was really consistent is that people said, payroll is nice, but I also need to buy inventory and goods and services, and they pay for subscriptions and they pay for rent and I have to pay taxes. So can I use that for that? And so that's how kind of FlexPay was born. We said, sure. We kind of, took this lean POC, made it into an MVP that contained more use cases and grew it over time.
But that decision specifically, so what tilted your decision towards listening to these requests? Because obviously, different customers have different needs and wants, and differentiating between that and the actual use case of focusing on what the product will do. What was it that convinced you that this is, the right direction for the product to make it a little bit more generic for different use cases?
Yeah, I think it's a really good question. I think qualitative feedback is great. It's really important, especially for a POC. It can really help drive and shape the product. But on decision making, just like we're customer centric home obsessed, we're 100% data driven, right? So the data was unquestionable, right? Ever since we launched it, we've seen pretty consistent quarter-over-quarter growth of over 80% in payment transaction volume. And we've seen the average customer use the product over 5 times a month, right? That's more than our core products. That's consumer level usage, right? That's not business usage. And so the use case was huge for a product manager. Just to put it in perspective, this kind of product market fit, this kind of stickiness, it is kind of like a product wet tree, right? So you can't just let it go by. You have to,
sure.
Okay, there's something here. And one of the other interesting learnings was that FlexPay is just one use case, but it actually helped us understand the need and ideate for additional buy now, pay later products, one of which we're working on right now.
Interesting. So what did you learn since rolling out FlexPay? What surprised you maybe about consumer behavior or about the needs of small businesses and payments that you didn't know before? Or what did it validate?
I think one of the things that kind of surprised me, first of all, like I mentioned, the usage, right? The usage rate was so high. When we tried to assess that compared to, what we think the revenue of the business is and the amount of expenses that use FlexPay to fund, it was almost around 70 to 80% of their business expenses. So if our goal as a company is to be embedded within, small business workflows and help them do their operational daily workflows, I mean, that's spot on, right? That's spot on validation that there's a use case behind it. So that was the key learning. I was kind of surprised where, we went out with this payroll and people said, we have so many other use cases we can use it for. Can you please use it for this? And can you please use it for this? We're like, yes, okay. we'll do that. And then we realized this huge demand that's out there, digital payments and the B2B space. In B2C, almost everyone today, or at least the big ones, offer some kind of digital payments. In B2B, it's around 60% of businesses offer it. So this is a huge untapped market, a huge opportunity. You have over 30 million small businesses in the US today, and they employ about 50% of the US workforce. And they're such a huge driver of the US GDP, yet this huge market is yet to be cracked. It's untapped. So all these businesses, well, not all, but most, don't have a convenient digital payment solution yet. And I think that's both the challenge and the opportunity, right?
Right. I think it's easy to forget that when we have players entering the field, it may create a perception that sort of the market has adopted it and that we're past that stage, but we forget that there's a very long tail that doesn't have it yet. And obviously 60% is a very long tail. And Hany, thank you very, very much for being here. I really appreciate the time and talking about payment solutions and the different trends of consumer behavior throughout recent history, and then how you're implementing this within Fundbox with Flex. But I think it was it's very interesting to see it from your perspective and how you reach those convictions yourself over time. And so thank you very much. Best of luck with Flex.
Thank you. Thank you. I had a lot of fun. Invite me again. I have a lot to say.
Thank you, Hany.